Hey everybody, this is Day Trader Rockstar and Happy New Year. This is the first market radar, beginning of the high probability watch list for 2016. This will be the first one. Monday will be January 4th. It is actually Saturday. I'm in the office today doing a lot of work and a lot of research. And, let's going to jump right into it. The market radar here is kind of go over it just to start things off fresh for the new year. Maybe some people are listening to the videos for the first time. The market radar is a overview of the markets. We focus on the S&P 500, talking about where the setups are leading or how the market is setting up for the following week that's coming up. All right. You're going to learn a lot about the different indicators that I pay attention to when you watch these videos. You'll see a definite relationship between price activity and the way these things work. And we continue to go through them. I try to make it as layman or logical as possible. And we're just going to go back and we're going to take it as we see it right now, and we're going to start things off. I'll explain some of the circles and squares that you see on the charts, the trend lines, moving averages. You'll catch on to that the more and more you watch the videos. But you'll see that I broadcast every day on the radio and on the internet on daytradingradio.com. So we kind of I apply these methods live on the air when we do trade live on the air. This is a research section of the show, and I do this over the weekend and I send this out. So let's kick it off here. We're looking here at the S&P 500. We know that we just finished the holiday session, and we just passed New Year's Eve, New Year's Day yesterday, and we're going to open up the first week of the new year coming up. Now we know that the time frame between Christmas and New Year's is a very slow and grindy type of overall bullish time frame of the year. Sometimes they might call it the Santa Claus rally. You have what we call the December effect. We have other things that are in play. And, and that just comes and goes, and we love looking at the stats. But it really comes down to what, looking back at it, the year is over. We get to put that behind us. There were some interesting things that happened on the final day of trading. I want to go over that first. But as you can see, the last 2 days of the year, well, actually, let's go out here. Last 2 days of the year ended up pretty negative. These big candles. We pay attention to the 60-minute time frame too, and you can actually see at the end of the day on Thursday, we also sold off pretty aggressively, which we're expecting. That was that was not unexpected. So that was kind of good, and we are setting up ourselves on the 60-minute time frame. So we're going to go into that a little. Overall, the year, we came down to the last day of the year, and we had if I could pull up some of these charts here, this 20-50-75 area up here represented a break-even spot for the year. That means if we closed above that, we'd be positive for the year. If we closed under it would be negative for the year. And you can see where we closed down here at 4 o'clock in a little after hours. 2035. So definitely a negative close on 2015. Let's start off breaking this down on our multiple time frames. We normally start off with our daily time frame. And as you can see, we've had a nice rotation. Now, what you'll notice on my chart is a study I did last week. I compared or overlapped the 60-minute to oversold, overbought levels to the daily overbought and oversold levels. The daily, which we're on right now, the daily chart, we're just really looking at the oversold levels on this chart, and we're marking them off with this yellow circle. Meaning when the stochastics get down and start to head back up or at least cross back over, we start to mark that area up. The important part of this is that it's just underneath that 20 line. That 20 line represents that 2080 line, which typically represents overbought and oversold levels. So every time we get oversold on the daily, we point it out. Now there's other things here that help us go, start a position into this zone, and that's the reversal candle or a candle that comes along with this time frame. This is not even looking at other time frames. This is just a daily and the recognizable pattern if we do have that pattern playing out. And we were trying to look for 3 pivot areas to kind of develop that pattern, be it a channel or a wedge or some other type of pattern that we typically watch. But as you can see here, there's definitely a relationship between the price when it gets oversold and we start to move back up in the rotation. So the rotation's down, the price is down. The rotation's up, stochastic's moving up, the price is typically moving up. Once we start to embed, and the rule on the embedded stochastic is 3 time frames or 3 time periods of the period you use, in this case daily, holds above or pinned up against the extreme level or the extreme level on either side, we consider that embedded, and then we have to watch for more strength. And this is a good example of that happening right there. But that ended up going into a little wedge pattern, and it ended up pulling back down, got oversold, bounced, got overbought, pulled back, got oversold, bounced, pulled back, and this is exactly where we are now. We chopped around and we've gotten back into an overbought level. Now that's dangerous because the tendency of this rolling over and momentum here starting to pull back, it's dangerous for the longs, not for the shorts here. And there's a couple other things that we're paying attention to. Is it's just the inability to take out the recent highs. We had a high here, we had a recent high back here, then we had a little lower high, and then a lower high, and a little lower high, and we're extended here. So we have a possibility of this crossing over and rolling over on the daily. That is a big negative, so we have to count that. And the candles are typical. The pattern here is very tough. We're still chopping around up here within reach of recent highs, but we haven't gotten back up there yet. We're chopping around the 200 period moving average. There's just so much going on in this zone that it has been at the end of the year. Everything that goes along with this time frame has been very choppy. We had a nice little run up, and then end of the year a little sell off. So the daily here is negative. We're going to put a negative sign on that, and then we're going to go to our hourly or 60-minute time frame. As you can see, I like to concentrate this on this time frame for our faster entries and more of our shorter term time trades. In this case, I marked these in blue, and as you can see, each oversold level, I didn't mark them down on stochastic. Just understand that blue represents that oversold level. This is oversold. This is oversold. That little blue level, this is oversold on the 60s. This is oversold. This is oversold. There's one there. One here. I don't have to put the circle up here. I'm just putting the blue lines down here. So each one of these bluish purple lines represents a 60-minute rotation. Now when those 60-minute rotations overlap the daily yellow rotations, we have what we call a daily and 60 setup. Those are the situations where we want to look for a bigger move in the market. In this case, it begins most of the bigger rallies in the market. This is on the hourly. I can't scroll out any further, but this goes out 1, 2, 3, about 3-4 months. And this is where we left off here. So just recently we pulled back off of a overbought level, got oversold, got a little bounce, and then failed. And the failure of this is kind of, that's a negative. We kind of failed out here because we don't know if this is actually going to get embedded down here and start chopping around under the 20, or are we going to pay attention to this like we've seen each one of these oversold levels that come down and bounce for 2 days and then rip higher. My guess on this, because stochastics on the 60-minute time frame, unless there's a real technical change in the markets, this shouldn't stay down here that long. And because of the volatility that we had at the end of the year, and there's some other things that I want to show you, I think that this little bounce here was a good bounce. It kind of rolled over on the last day, and we kind of started seeing some weakness. And that, just you can't take the last couple of days of the year and put it into this mix because of light volume. There's other things at play, and you just really can't count it. But what I am going to count is that this is oversold and possibly a double bottom kind of little bounce here, and possibly even a divergence. As you can see, our lower stochastic band down here, or kind of a ram in the bush, hasn't really turned over yet. This one has turned over. We've definitely taken out the recent lows, but it hasn't made new lows. So there's a possibility if this corrects itself early in the week, this turns back up and we'll have that classic lean divergence. Now a couple other things we want to pay attention to. We have the potential here of this kind of a rising, this candle right here. Let me clean this up a little. All right, you see this rising line and this line up here. It has the appearance of this kind of rising wedge pattern. And these wedge patterns, like you see back here, tend to fall off. A rising wedge tends to break down. Falling wedge tends to break higher. You can see a couple great examples. This is one of the more highly effective patterns, and I tend to follow them very closely. Now, it hasn't completed its full formation. Normally, we look for this pattern to play out to about 65 to 75% into the pattern before breaking out. And when I say breaking out, a rising channel would be a breakdown. So we're not putting too much into this pattern yet. I just want to keep measuring it out. There's a couple pivot areas, and we're going to continue to watch it. There's so much here going on that that we know we have our daily is kind of negative, and our 60 is possibly kind of positive. It could be a big positive on the 60, and that could turn out to be a daily embedded stochastic. So we haven't really crossed over here on the daily. This could easily flatline up here, and this could end up being a very strong rally. So we have to just let this play out, I think, a little bit better. Like I said, I think that the 60-minute time frame, we've seen this back down here a couple days where we've actually jumped down here, got a little bounce, and then kind of rolled over, and it's like, uh-oh, we're starting to get embedded down here. But the truth is, we've always rallied from that, even a secondary bounce off the 60-minute time frame. Even back here, we kind of chopped around and eventually bounced. And this is a good example back here where we came down, tried to bounce, pulled back a little, and then ripped higher, and this was a much bigger move. So we have the potential for a much bigger move here. We'd love to be able to just come on and say, hey, this is where the market's going. Sometimes we have those perfect setups. We can look at them and say, wow, this is a great divergence setup, and we've seen this play out so many times. Versus something that could go either way, and we had the end of the year type of trade that kind of chops things up. So going into Monday, Tuesday, I would expect this 60-minute time frame to kind of resolve back up here, start to rotate back up, start to push back up. If it starts to flatline here and we start to curl over, we're going to have a lot of things working against us. And we're going to keep our eye to the ground there and kind of hear the rumblings of the market. If we are starting to see a lot more pressure being put down here, we start to roll and we start to feel that this might be rolling over, the daily might be rolling over. We might want to even consider that weekly here and keep another eye on that, because if that starts to fail and starts to roll over, things could get much worse. All right, so that's our first market radar of the year. I hope you enjoyed it, but this is something that I do daily or hourly and minute by minute. I try to call the market like this, minute by minute, each and every day on daytradingradio.com. So definitely come by. If you can pick it up anywhere, you can put it on your phone, you can pick it up in your car. Just get in touch with us. We'll show you how to do that, or just come to Day Trading Radio and log in and watch the show. Looking forward to getting into the markets again next week. We did take a hedge. Let me just finish off. We did take a hedge into this week over the weekend. Now, futures, I keep on thinking it's Sunday. Wow, I keep on thinking it's Sunday. It's only Saturday. So futures will open up tomorrow at 6 o'clock, I'll have the futures up. We'll get an early look on how things are going to be setting up. But just one thing we want to pay attention to is that, let's take a look at that hour. You see how we sold off pretty aggressively? Especially I want to look at that 5-minute chart. We'll actually look at the 15-minute chart. You see that 15-minute candle, that big sell-off here in the last 15 minutes was really pretty intense. Now, there was one thing that I was following, the tendency for the market to sell off in the last 15 minutes of the day. That has been shown on a great chart. It was shared by Sonny in the room, and I'm just going to go over and kind of share it with you. Just kind of show it here. Let's see, here it is. It was tweeted out by, I try to give credit, Eric Scott Hunsader. And this is the S&P price change since midnight on the last trading. So going out here, the S&P futures, actually, you can see the price change from 12 o'clock, what happened overnight, and then when the market opened up at 9:30, we have a tendency to be a very flattish day. But as you get to the last, right here, 3 o'clock, 4 o'clock is right up here. If you can't see that, I'm going to move that up there. You see that 3 o'clock, 4 o'clock area here. All right. Now, the only really this on the 2012, we moved up into the close, and we closed higher for the day. Basically, every single other day, other than the 2013, we sold off. It was 2013, this orange line, and this yellow line, which is 2012 and 2013. we actually pushed up the last 15 minutes of the day, last half an hour. Every other day here, you see there was a steep drop-off. If you look at each one of these colored lines, they all spike down right at the end of the day. They all spike down going into 4 o'clock. All right, it was a very, so we kind of put that out there, and I put that out there. I said, watch this last few minutes. We're probably going to get some heavy selling into the close. And that's, might mark the chart up here a bit, kind of make things look a little uglier on the 60-minute time frame with the crossover. But we're going to see if that is just something that we have to just cross off and just start fresh January. Is this something that just gets done? 8 out of 10 times we start to see this type of action at the last trading day of the year. I'm not putting too much behind it. It's not. We don't micromanage it that much, but we did have a little sell-off, and if you were watching the show at that point, you knew to watch out for that. So that's it on that, and again, I think we covered everything for the first market radar of the day, and of the year. So I hope you enjoyed that. I'll see you in the markets on Monday, and I'm working on our watch list now, our HPS watch list for the members of Day Trading Radio. Have a great weekend, and we'll see you Monday.